It may go by several names, but no matter what you call it, a real estate transfer tax is a terrible idea, and it's coming for Utah. All right, make sure you hit that subscribe button so you can stay up to date on the market updates, interviews, and important stories about homeownership here in Utah so you can stay informed and entertained. I'm your host, Darren Watson, and on this episode of the Utah Realty Review, I'm going to talk to you about what you can do to help us avoid the next market crash here in Utah. In February of 2019, the Utah legislature introduced the Tax Equalization and Reduction Act, known as House Bill 441. And after just 2 weeks of debate, the bill failed. But shortly following the general session, after it closed this year, the legislature decided to reopen the bill and are again seeking to institute it in a special session that will take place before the end of the year so that this bill goes into effect before 2020. So Darren, what exactly is the Tax Reduction Act and why are you opposed to it? Aren't lowering our taxes a good thing? Well, allow me to explain. This 250-plus page bill will go into effect by 2020 and is a complete overhaul to our tax system here in Utah and is going to greatly shake up the way that we collect tax in the state. Here's the basics. The main focus of this bill is to introduce a service tax of about 3.9% into our market. And this tax is going to cover things like construction, labor services, legal services, haircuts, cosmetic surgery, financial services, private flight and golf lessons, health insurance premiums, real estate deals, financial services, and professional other whatever services. Basically every small business here in Utah. It also introduces a reduction in the sales tax here in the state from 4.7 down to 3.1%. However, Governor Herbert has claimed that he'd like to see it reduced down to as low as about 1.75%. It includes an income tax cut from 4.95% down to 4.75%, and a 1% tax on healthcare premiums. It also introduces a real estate transfer tax of 0.075%, and it's this last part that really got me going and is the reason why I wanted to make this video for you today. Now, if you do want to learn about the other aspects of the tax bill, I've actually decided to do a follow-up video to this, which I'll link at the end of this video, so you can go and watch that after this. So what exactly is a real estate transfer tax? Well, to sum it up in the most simple of terms, it's a tax that takes place anytime real property exchanges hands. So anytime that a buyer buys a property or seller sells it, somebody's going to be paying that tax, and it's usually based off of the value of the property at that time that the transaction took place. Now, transfer tax can be paid on several different levels, including the city, the county, and the state, with each taking their own portions and having their own percentages. For example, in Washington state, there's a transfer tax of about 1.5% to 2%, depending on where the house is located. As far as House Bill 441 is concerned, it's only a tax at the state level, but once these doors are open, it can really be taxed at any level. The city and the county might jump in and say, hey, we want to get in on this action as well. Now, there are a few exemptions to paying this tax, and that's going to be in cases where there's no real transfer of value taking place. For example, when somebody uses a quick claim deed to give a portion of their property or give a property over to a spouse, that won't be taxed in this case, at least not yet. Ultimately, this transfer tax will add on about $300 to the closing costs of a home purchase. Well, that doesn't seem so bad. It's such a small amount when compared to the hundreds of thousands of dollars you're spending when you buy a house. I mean, why is this such a big deal? The NAR, not to be confused with the NRA, sums up several key concerns in their official statement on transfer taxes. The National Association of Realtors opposes the imposition of real estate transfer taxes or fees under any condition. Whether a general or earmarked revenue source, real estate transfer taxes and fees are a major burden to buyers and sellers, particularly at time of closing. Additionally, these taxes and fees have a negative impact on housing costs and economic development, reduce housing opportunities across the income spectrum, and are a particularly poor revenue source for general operating budgets of state and local governments because of their extreme volatility. Now, there's a lot to discuss there, so let's dig a little deeper. In one study from 2012, the University of Pennsylvania found that the introduction of a transfer tax in Toronto caused a 15% decline in the number of home sales, as well as a decline in housing prices in the area. And some studies place this even as high as 20%. decrease in the market activity. Another study from the National Bureau of Economic Research noted that the results of their study suggested that a tax on real estate as a transfer tax can distort market prices more than the value of the actual tax. And when potential taxpayers have the option of not participating in a market, as is the case with a real estate transaction by not offering their property for sale, a tax can destroy productive matches between potential buyers and potential sellers. Basically, it says sellers are not going to sell because they don't want to pay the tax, and maybe buyers don't want to buy because they can't afford the tax. And yet another study from the Australian National University, along with the International Monetary Fund, found that the impact of an increase in tax rate is to lower house prices, suggesting that the economic burden of the tax falls on the seller. They also noted an impact of the transfer tax on housing turnover. A 10% increase in the transfer tax rate lowers turnover by 3% in the first year and 6% if sustained over a 3-year period. Now, the results of these studies, as well as several other studies, all point to the same conclusion. A transfer tax has a significant negative effect on the housing market, which in turn is negative for the market in general. Of course, when you increase the cost to buyers, you decrease their ability to exit the rental market. As the NAR points out in their study on transfer taxes, increasing the costs of transfer of existing residential property are likely to reduce the ability of new and current home buyers to purchase a home. An increase of only $625 in closing costs could prevent upwards of 203,000 households across the United States from purchasing a home each year. Now, to put this in perspective, in 2018, there were roughly 5 million residential homes and condos sold in the U.S. Now, with a small tax of just $625, it would reduce the housing market and the buyers in the housing market by a whopping 4%. Now, I'll give you my own personal example. When my wife and I bought our first condo, we ended up only having to pay $100 out of pocket for our closing costs and for a down payment because of the way that it was set up. Now, if at that time there had been a transfer tax like this and our closing costs would have been a couple $100 more, I don't think we would have been able to afford it, and it would have forced us out of the housing market and kept us in a much more difficult and poorer situation as a renter. That first step to becoming a homeowner for the very first time is so crucial for so many families, and it helps them break generational poverty and establish a much better future for themselves and for their family. Now, I could do an entire video on the benefits of homeownership, and I probably will at some point in the future, so watch out for that. But if this tax causes housing prices to decline, won't renting become more affordable? I mean, the landlord doesn't have to pay as much for their mortgage now, right? Nope. As I've always pointed out to my clients in the past, you can look at the recession of 2008 and see rental prices didn't go down, they went up. The simple rule of supply and demand comes into play. If you push more people out of the housing market and into rentals, the rent prices are going to go up. And in a state where rent prices are already choking renters out, that's a terrible idea.
You said it, the rent is too damn high.
But let's take a moment to explore an even darker side of this tax law. The state is estimating that the tax generated by this residential transfer tax is going to be close to about $36 million by the year 2020, just 2 years from now. But the math just doesn't add up on this. One major problem that the NAR points out when fighting this transfer tax is that the housing prices are volatile. They go up and they go down, as we've all seen all too well over the last 10 to 15 years here. When the prices aren't stable, this becomes very difficult for the state to have any kind of a budget and to estimate and plan ahead. So what happens when the state doesn't collect its $36 million? There are roughly 45,000 to 50,000 homes sold in Utah every year, and with an average price of about $375,000, there's just no way that the state is going to make the kind of revenue off of this tax that they anticipate they'll get. For example, if we say that over the next 2 years, 100,000 homes sell in the state with an average price of $375,000, and then tax that by the proposed 0.075% transfer tax, we come up with revenue of only $28 million. And that's almost a 25% difference from the state's estimate. Now, this doesn't even take into account the fact that it has been proven time and again that a transfer tax being instituted lowers the number of home sales in that area as well as the home prices. And so when you factor those details into the equation, you're coming up with an estimate that's even farther off from the goal. They're not going to get anywhere close to this. Well, at that point, the state will have no other option but to say, shucks, looks like we didn't get what we planned on. We're going to have to raise that tax up a little bit higher to make sure we get enough revenue coming in. The argument will be made that 0.075% is just far too low, and we need to bring our tax code more in line with the other states. States, for example, like Washington. Now we're no longer talking about a small tax of just $300. It's beginning to look a lot more like $5,000 to $7,000 that a buyer's going to have to come up with at closing on top of their down payment and other closing costs. Welcome to renting forever. We have a strong economy here in Utah, and our unemployment rate is unbelievably low. We're constantly at the top of the charts for growth and opportunity here in our state, and I want to keep it that way. Implementing this transfer tax will stifle our growth and ultimately lead to a smaller tax base, meaning that we're going to get less revenue from our other tax sources. Utah has over $1 billion budget surplus. We don't have an income problem, and we definitely don't need to be burdening the people of this state by making it more difficult for them to get into home ownership and more expensive in the process. There are other more sensible changes that we can make to our tax code to deal with the concerns that some of our representatives are having. So I'm asking you to get involved and help spread the word. Share this video to get that awareness out there and let people know what's going on. Contact your representative, show up at the town hall meetings that are going to be held over the next couple of weeks to let the legislature know that you don't want to see this transfer tax implemented and put into place in our state. No matter what your view is on the tax law, at the very least, we should be telling them that they should not be rushing this bill through with only 1 month of town hall meetings, giving people an opportunity to get their voice out there. Right during vacation season, too. Nobody's paying attention to this. It's the wrong approach, and they have a duty to push this back to the general session of 2020 so that we can all take a little more time to read it over, get educated, and understand what it is we're passing before we make a mistake. I've included links to all of my sources, as well as how to get involved and when the town hall sessions are going to be held, right here in the description below or over at utahrealtyreview.com. Now, as a member of the Salt Lake Board of Realtors, I'm doing everything that I can to make sure that this isn't implemented in our state and that we protect and defend property rights for you out there so you have the privilege to become a homeowner. I hope you'll join me in this fight to keep Utah free from any kind of a transfer tax that could be a burden on the housing market. And again, if you would like to learn about the other aspects of this tax bill, I'll be putting that follow-up video out here soon, so make sure you subscribe to the Utah Realty Review down below, and just watch for that when it comes out. And if it's already out, it's going to be up here somewhere, so just click on that. Again, thank you for watching this episode of the Utah Realty Review.